I think multipolarity was a concept about a year ago. I think it's now become a reality. Once we start talking about two-speed growth patterns around the world, we also then saying that different parts of the world will see shifting patterns of investment and become more attractive when they were previously less attractive. And there's a formidable interest now in Africa. So Africans who are watching us should take great pride in the fact that now the world's attention is on Africa, in addition to India and China and Brazil. And the question we've got to ask ourselves is, how do we prepare ourselves to handle that attention and make sure that there's maximum opportunities and advantage for all the people of Africa.
Maximum opportunity speaks to the idea of shared growth, which is also a term that's been punted at the World Economic Forum. But we are seeing growth, but in many of the leading economies, it's subdued growth. In South Africa, which is a leading African economy, it's not optimal growth at 3.2%. So what do we do not only to share the growth, but to really make sure that we optimize growth?
Well, Africa, as we stand currently, is the second fastest growing in the, region in the world, firstly. Secondly, Africa has some of the fastest growing economies of the world now and over the next few years as well. What we're all learning is that growth in itself is not enough. The question is, what do you do with that growth and who benefits from that growth? So as you correctly point out, one of the key challenges is inclusive growth. Whilst we have growth and whilst businesses make their money, it's important that we don't become more unequal in our societies, that we tackle issues of poverty, that we raise our education levels, that we prepare a much more skilled workforce, amongst many other things that African citizens actually require. So inclusive growth, or shared growth as you call it, is certainly a theme. And each of us as governments, as people, as business people, need to ask the question, what contribution can I make to that mission?
Well, in South Africa, we're told to create meaningful employment, and we'll talk about that in a second. That economy needs to grow at the very least 6 to 7%. I refer to the 3.2% figure, and yes, it's a function of the recession we've come from and all sorts of other things. But even when South Africa was growing really well, it was jobless growth, and that's concerned the unions, and that's certainly concerning the South African people.
I think the jobless growth was a mistaken notion. We did create 2 million jobs in that 5-year period, but it's not as many as we required. So it is quite true. If we carry on at 3% or 4% or 4.5%, we won't crack unemployment in South Africa. And that's where the idea of 6 to 7% growth comes. But remember that we are an economy that has a very advanced and developed sector and a very poorly developed sector with very low-level skills. The growth path that the government is now putting out for discussion and implementation to various parties is saying, how do we tackle that problem? How do we raise the level of growth? How do we increase the number of jobs at the top level and at the bottom level? How do we provide a much better education and training system so that we capacitate particularly our younger people? And in raising the growth levels, make sure that we tackle the issues of development and inequality as well.
I mean, as we talk about a more inclusive growth strategy locally in developmental terms, it raises the issue of South Africa's competitive advantages. Yes, the leading mining economy, we have reduced exports by 20%. I wanted to say we're good in manufacturing, but we're not as competitive as we ought to be when you look at what's happening in Asia, India and China in particular. Exporters are blaming it on the South African exchange rate. Interventions we've seen through the South African Reserve Bank's dollar sales, but there's an argument that more could be done at a policy level. Do you think you could be doing more?
There's no problem has one single bullet that will solve it all. So that's the first thing we must say. The second is the exchange rate is an important component, but it's part of a much more complex dynamic around the world. It's related to the two speeds of growth, because the developed countries are not able to grow fast, they're not able to offer the returns that people require, their interest rates are very low. On the opposite end, developing countries have higher interest rates, they have more to offer in terms of growth and better returns to offer as well. And that starts attracting money. What we don't want in developing countries is hot, short-term money, where people come in, make a quick profit and go out. What we want is long-term commitment and long-term investment. The second thing to become competitive is that we've got to tackle our own productivity issues, we've got to get our logistics systems going, and there are a number of issues that the growth path itself identifies that we need to tackle. Key amongst them is skills, and that's also part of our plan, and indeed hopefully part of the African plan as well. So the ideas are all there. I think 2011, 2012 is about putting those ideas into action, learning from the things that we do, and becoming more creative, but certainly adding a touch of urgency to ensure that we get down to the practice rather than the talk.